Well, as if leading the U.S. Federal Reserve Board is not challenging enough, the next central bank chair faces an additional burden: credibility issues, now that President Donald Trump seems to have stepped up efforts to exert a heavy hand on monetary policy. For more on the Fed and what lies ahead, let's go to Blake Gwinn. He's head of U.S. rate strategy at RBC Capital Markets. He joins us from New York. Blake, thanks a lot for joining us. Investors increasingly are thinking about and talking about the possibility or likelihood of a new Federal Reserve Board chair, and one who has been put there by Donald Trump and in the minds of some put there with instructions to move rates down. How do you think about this issue?
Well, before we get there, I mean, let's just kind of remember the timeline here. So there is one board member whose seat will come up in January. That's Kugler. So there will be an opening there that Trump can name somebody to the Federal Reserve Board. Presumably that will be his chair pick, but he doesn't have to name that person as chair until Powell's term is done, in the middle of next year. And we do have Waller, who has often been mentioned as a potential candidate, also already on the board. So that will have to be selected from sitting board members. So it's either going to be this new seat that they can presumably name somebody to in January, or Waller, who is already seated on the board. So I do expect, we'll have at least some indication of which way he's leaning on that January seat in the coming. I will say, and I always remind people when we have these conversations about leading the Fed, we are very used to Feds that are led by respected leaders who, have moved Federal Reserve decisions through building of consensus. That means they're listening and responding to the FOMC participants and letting those FOMC participants change their views, but also are respected in a way that they are able to sway others to their point of view. Now, if we get a Fed chair that doesn't necessarily fit into that model, reason for cutting rates is not, I have this very strong framework, we're looking, here's what the data is saying, but is instead saying, well, we need to get debt servicing costs down, or this is what Trump wants, this is what we should do. I don't know that that's going to win over the committee. So I think this new Fed chair, we shouldn't just assume that the new Fed chair can come in and slash rates unilaterally. They have to win people to that position through reasoning and kind of mutual respect with the rest of the committee.
But you have said recently in some recent commentary that you think this scenario of political interference into the Fed is a new one. You said recently, quote, new threats from the administration about investigating Powell, along with the suggestion that Trump could possibly fire him for cause, pose a major upside risk to yields and the curve if pursued further. You've also said that if the administration pursues this path further, we would expect unprecedented incursion into Fed independence to drive renewed concerns about U.S. Treasury sponsorship and a spike in inflation. So you don't think that this is all much ado about nothing. You think that there is the possibility here of political interference with the Fed, if you want to call it that, political pressure or interference on the composition of the Fed and what the Fed actually does with rates, and that there could be market consequences.
Yeah, and that is kind of a separate tail risk. What I was kind of talking about just a second ago, that's really more the normal course of business of going forward with replacing Powell. There is this kind of new tail risk that you just mentioned, and I wrote about recently, which is that we had the FHFA director, kind of tweeting and saying some things about how Powell should be investigated and potentially fired for cause. We've had Trump talking for a long time, and even back to his first term, about potentially firing Powell. But the assumption here in the legal reading is that Powell is protected unless fired for cause. So the fact that they are, that this has been raised by somebody inside of the administration, that is a bit of an escalation. I really think that if we see them pursue that course of action, and it doesn't look like that's happening yet, still pretty early, those tweets and that conversation really just started up, I believe, last week. If they were to go down that road, I think what you could see is foreign investors really starting to wonder about the stability of U.S. monetary policy, people starting to worry about long-run inflation expectations. If you have somebody that's perpetually, if you break down that independence and you have a president that is putting pressure on the Fed chair to keep rates artificially low. It could spark inflation over the long run, so you could have long run inflation expectations going up. Both of those things would serve to push yields higher. That's the exact opposite of what Trump is trying to achieve here, which is lower yields. So it's very counterproductive. That doesn't mean I necessarily think they will pursue that route. So right now, I think it's a tail risk. I hope it's one that they don't actually pursue, but it's one that I'm certainly keeping it.
You've also said, from a market perspective, we think rates should be trading on the effectiveness of a dovish candidate, not the outright doviness of his or her rhetoric. What exactly do you mean by that? Explain further.
Yeah, this goes back to the idea of, the Fed chair being able to lead the committee and being able to actually deliver on their policy views and be able to sway other members of the committee to supporting, a dovish kind of view of rate should be. If we have somebody that comes in and is talking a very big game, who's saying very, very dovish things to get Trump's attention, or to, we've heard people saying that a lot of these speakers are kind of applying for the job in public comments. If you have somebody that's talking a very big dovish game, but is really seen as being, primarily a loyalist to Trump, and really isn't basing those dovish views off of a sound framework, basing it off of what the data is telling you, and they are not able to gain support for those cuts that they want to deliver because of that, you might end up in this weird scenario where the person who's talking a bigger dovish game is actually able to deliver fewer rate cuts than somebody who may not be as bombastic in the press, but it really is basing those, basing the call for cuts on something, much more solid, a better framework based on the data. So that's all I was saying is, don't just pay attention to the people that are being very bombastically dovish in the press right now. Pay attention to the people who we think could actually sway the committee to deliver cuts in the future.